What's up everybody, welcome back to Trizzy Trades. If you've been watching my videos, thank you for taking this journey with me through my ups and downs of my trading. My intentions are to have far more ups than I do downs, but I'm ready for them downs to come. Today we're going to talk about consolidation patterns. I don't have any new trades on, but I do have a few on my watch list using consolidation patterns, so I will show you those as well. Consolidation patterns are like stock prices taking a breather during a trend. Price action pauses for a little bit and moves sideways. Oftentimes, the price range gets tighter. Typically, you wait for a breakout of this consolidation in the direction of the underlying trend. This makes the trend continuation pattern. There are trend reversal patterns where consolidation happens, but I'll cover that in a different video. First, let me show you how my portfolio is doing. We still haven't gotten to 100% on any trade yet, but I do have a couple of them climbing towards that. Once there, I will take a little bit of money off the table and lock in profit for trades that I leave on. Citibank is leading the charge, up 83%. I have no idea why I only have one contract. I'm actually kind of upset, but whatever. Let's talk about the patterns. The trend continuation patterns that I use are flag patterns, pennant patterns, triangles, and channels. They are virtually all the same thing, consolidation. In each pattern, we look for a decisive breakout in order to enter the trade. In a classic flag pattern, there's a strong price movement upwards, followed by a period of consolidation within a rectangular channel formed by parallel lines. This consolidation phase resembles a flagpole, which is the initial move and then the flag. The key is in the breakout. If price breaks decisively above the upper trend line, it suggests buyers are regaining control and the uptrend is likely to resume. The measured target for the breakout is typically the height of the flagpole projected upwards from the breakout point. However, since I give my trades a lot of time to move, I typically let these kind of trades run and I lock in profit on the way. Once you understand a flag pattern, you understand all of them because they're all the same thing. It's just that price is consolidating in the form of kind of a triangle or some kind of rectangle. Remember, these patterns are not guaranteed. Sometimes a breakout can be false and the trend could reverse. That's why volume confirmation is your best friend. Ideally, you'll see volume decrease during consolidation and then surge on a breakout, adding weight to the continuation theory. However, just because volume does not confirm does not necessarily mean you should not enter the trade. Here are some examples of pennant patterns on stocks that I follow. This is the price chart of Uber on April 28th, 2023. Price was at $31.17 per share. You can call that a flag, pennant, triangle, doesn't matter. It all means consolidation. On the following Monday, price broke out of consolidation decisively on good volume. That was indication to enter the trade. Over the next 3 months, price skyrocketed to $49.81 per share, a total gain of 50.79%. And that was with the stock price. But we trade options, so imagine the gain you would have gotten with those. After that, it started to consolidate again for the next few months. Again, call it a flag or pennant, doesn't matter. Still consolidation. On November 3rd, 2023, it broke out again on above average volume. That was the trigger to enter the trade again. In 2.5 months, price skyrocketed again, this time by 74.88%. And guess what? It's consolidating again. Now, I can't tell you what it is, but I can only tell you what it looked like. It might break out again. It might not. I don't know. But if it does, I'm going to be prepared. Let's look at another stock. On October 31st, 2023, AMD was trading at $98.50 per share. It has been consolidating for almost 5 months. The following day, AMD broke out on 2 times the average volume. This was the time to enter the trade right here. If you did, you see what happened over the next 2 months. The stock price increased 69.84%, and then it consolidated again, and then it broke out again. This doesn't just happen in bull markets. It happens in bear markets as well. If price is going downward, you are looking for flags, pennants, triangles, channels that are just upside down. For example, if I rewind back to June 10th, 2022, AMD was trading at $94.82 per share. An upside down flag pattern formed, so we are looking for a breakout to the downside. There was a breakout and a continuation to the downside. The next month, price turned around and started going back up. But after about a month of doing that, it continued back downward even further. Now you can see why I do long-term options. This stock needed a little bit of time to move the way I wanted it to move. Now you might think I just cherry-picked a couple of examples just to make these patterns look good. The fact of the matter is that's how price works in the market. It goes up, it consolidates, then up again maybe. It goes down, consolidates, and goes down further maybe. That's not to say that this pattern is going to work every single time. I mean, It did help that the market has been on a historic run since November of last year, but it's just another tool in your tool belt to help you make the case for a trade you're about to take. And given the right market conditions, these consolidation patterns can make you a lot of money. And these patterns happen all the time in the market. Just over the last 9 months, you could have made money off of Celsius, Costco, Copart, Discover, Meta, Microsoft, JP Morgan, Schwab, Trading Desk, Waste Management, even DraftKings. Speaking of DraftKings, the stock has given me a second chance to enter if I want to. Price has broken out of the triangle and retraced back to the upper limit of that triangle. Unfortunately, the fundamentals are not there to support the technicals. So if I do trade this, I'm not going to put a lot of money behind it. You know what? I changed my mind. DraftKings might be a good trading opportunity. I usually don't trade companies that do not have positive net income or free cash flow. But DraftKings is showing amazing growth right now in a time where sports betting is becoming legal all across the nation. If I look at the last 3 years of revenue reported by DraftKings, 2022 revenue grew 72.9% from 2021 and 63.6% in 2023. And for the year of 2024, DraftKings is projecting a revenue growth to $4.775 billion. That's another growth rate of about 30.3%. They also have a metric called monthly unique players, or MUP, where they keep track of the number of users per month that have at least one paid engagement on the DraftKings platform. Over the last 3 years, that number has grown from 1.5 million to 2.7 million monthly unique players. Another metric that they keep track of is the average revenue per monthly unique player, and that number is growing as well. It has gone from $67 in 2021 to $113 in 2023. So not only are they growing the number of users of DraftKings, but also the amount of money that each user spends per month using DraftKings. As for the first quarter numbers of 2024, you might see something special because during the first quarter, you had the Super Bowl and March Madness. There has been some news of potential federal regulations on sports betting, but no legislation has been presented yet. For all those reasons, I'm actually ready to trade DraftKings. The one that I really have my eye on is Chevron, ticker symbol CVX. This thing has been consolidating for an entire year into a pennant pattern. It looks primed and ready for a breakout. On the fundamental side of the game, Chevron has a market cap of $290 billion. The only other oil and gas company that has a higher market cap is ExxonMobil, and they have been on a heavy run, while Chevron was still consolidating. In terms of revenue and net income, 2023 was a down year for Chevron. But here's the thing. The same thing can be said about gas prices. Hear me out. According to GasBuddy.com, the national average regular gas price took a nosedive towards the end of September of last year. However, in 2024, gas prices have been marching their way up, and we all noticed that at the pump. Now check this chart out. The blue line represents the percent increase of Chevron's stock price over the last 5 years. The orange line represents the percent increase in the national average gas price over the last 5 years. Do you notice the relationship between these two? Now, if I put the quarterly revenue of Chevron in this chart as well, you'll notice that it's following the same path. So is it safe to say that if gas prices are rising, Chevron's revenue will rise along with its stock price? Maybe, we don't really know. But to me, it's worth trading. So the next time you see my portfolio, you might see this trade on it. Stay tuned to see if I can make some money off of this. If you like the content, please hit that like button, comment if you want to, subscribe if you will. I'll see you later.